401ks, IRAs, stocks, bonds. An economic train wreck is coming, America. All this fake wealth that has been artificially created over the past decade that has made millions of people feel wealthy, feel good, feel rich, it is going to be wrecked. And that day of reckoning is getting closer and closer. It's Monday, April 11, 2022. We got a lot to talk about today. Before we get into this video, before we get into the data, the latest news, please make sure to give this video a thumbs up, share this video, make sure that you are subscribed to this channel, hit that bell notification down below so that you are alerted with the newest videos. But without further ado, let's get into what is happening right now. Dow Jones just closed a couple hours ago, closing down 413 points, NASDAQ down 300, Bitcoin, as I make this video, down 3,300. A little earlier, it was down 3,800. Gold right now up around $12, silver up around 40 cents. NASDAQ just really getting clobbered, down 2% today. And what is going to turn this around? These markets now fear that interest rate hikes are coming. And as I've said in the past, I don't think the Fed is going to reverse course. I think they are going to raise rates in May, 50 basis points, quite possibly another 50 basis points in June. And every meeting this year, there's going to be a rate hike. 10-year bond yield, as I make this video, 2.78, highest level in 3 years. And you know what this means for housing. You know what this means for the 30-year fixed mortgage rate. It's going up, up, and up. Mortgage News Daily, 30-year mortgage rates jump to 5.25%, highest since 2009. In case you didn't hear that, right now, 30-year fixed mortgage rate, 5.25%. That is the highest since 2009. If we see this jump another half point, we're going to see really, really big trouble in housing. And right now, I believe at 5.25, we're going to begin to see trouble in the housing market. Again, as we've spoken about this numerous times, with rising inflation and rising interest rates and rising mortgage rates, this is really the perfect storm. And you have to think, how's the average American today put down 20% on a house? See, the problem is when people are paying this much to just rent, how do they save for that 20% down on a mortgage when after they pay rent, gasoline, food, and other expenses, utilities and whatnot, they don't have any money left over. They're going in the red. So it's getting so hard for the average American to be able to save money in order to have a down payment on a house. It's getting very, very hard. We need these markets to collapse, ladies and gentlemen, and that might sound shocking. That might not be what you want to hear, but in order to get true valuation of assets like stocks, bonds, and real estate, because they're so overvalued, we have such a ballooned bubble right now that everything is overpriced. And in order to get the true valuation of these assets, things must collapse and start over because everything is out of whack. I've been looking for properties now for a little while, but over the last 72 hours, we have really been looking at properties in the southern part of the United States. And I will tell you, it is one price reduction after another price reduction, after another price reduction, after another price reduction. I'm seeing more properties being reduced daily, and this is going to increase. And these people who say that home prices are just going to continue to go up with inflation, you are completely 100% wrong. Nobody will buy a house because nobody will be able to buy a house. Typically, as we know, when we look at history, when interest rates rise, and when they rise a lot, you begin to see the price of homes come down a lot. So that's what I believe we're going to see, but I think it's going to be worse than that. I do honestly believe we are on the cusp of a housing crash. Now, I believe things are beginning to correct a little bit right now. I believe that that will accelerate in the summer. When does the crash happen? I don't know. Could it happen this year? Absolutely. Could it happen in 2023? Absolutely. Are prices going to go up another 20% in housing? I don't think that's even possible. I could be wrong. If you disagree, comment down below. If you agree, comment down below. I don't think we're going to see another 20% increase in the price of real estate this year. I just don't think that's possible. March runaway energy prices and higher food costs could mean hottest consumer inflation since 1991. Well, honestly, it would be hottest inflation ever, because if you go back to the formula of the 80s of how they would come up with these inflation numbers, we would be double the inflation we are right now. CPI will be reported tomorrow morning. This will be very interesting. Economists expect inflation rose 1.1% in March from the prior month. The year-over-year gain is expected to be 8.4%. I think, what are we at right now? 7.9%. That's expected to go to 8.4%. I think that they're really doing a lot to keep that number at 8.4%, if that's the number it comes in at. I think it could be 8.4%, as high as 9%. But you know that they're playing with the numbers, right? They're manipulating everything. So you know that these numbers are very, very manipulated. Would it shock me if it was below 8.4%? Wouldn't shock me at all. Would it shock me if we were above 8.4%? Wouldn't shock me at all. But it is going to get ugly, folks. And no matter what the official CPI is, every time you go to the gas pump, every time you go to the grocery store, you don't need the CPI to tell you what's happening. Your wallet, your pocketbook, your checkbook is telling you what is happening. And we are approaching, no doubt, a perfect storm. And many have been ignoring reality. They've been ignoring the warnings. And there are people still literally confrontational. And this video may upset them because it's reality. And I understand that these people are maybe heavily invested in these markets. They have 401ks, they have IRAs, they have fake wealth, in their homes. I understand that. And by me telling the truth, by me reporting the real data and reporting the truth, this upsets them, because they want to stay in fantasy land. They don't want the stock market to come down. They don't want their housing values to come down. Who would? I understand. But the reality of all this is that this is all fake. It's all been manipulated with 0% interest rates, cheap money, tons of debt, where the people at the very top really cashed in. And we sacrificed the US economy for the stock market and for a small portion of people to make money in the stock market, while hundreds of thousands of businesses have been shuttered forever, while we are paying over $6 for a gallon of gas, while we are now paying the ultimate price by inflation. This is how we're paying for all this. All the stimulus, all the quantitative easing, the 0% interest rates. We have something called inflation now. And this is now us having to pay for all this, so that a small group of people could become very, very wealthy, or that, people's 401ks and IRAs and their stock portfolios have been up, or the price of their home has gone up. Well, it's all gone up because it's all been pumped with $6+ trillion of money, stimulus packages, low rates, 0% interest rates, and this FOMO that has been created by people on the television telling you that you better continue to use those credit cards, you better buy a house, you better go shopping, you better buy another big screen, keep buying, and buying with money you don't have. And here we are, and we are about to pay a really severe price. Rent, medical care, food, gasoline, all expected to jump, according to this article here on CNBC. And in this article, there was a survey taken, and in the survey, it says that anxiety has increased over job stability, with the probability of losing one's job over the next year. 11.1% of people in this survey on CNBC have anxiety, and it's increasing because of the probability of losing their job over the next year. Another one from CNBC. Gas prices can vary a lot depending on where you live, and it goes over the 10 states where drivers are spending the most, but it also has another survey in this article, very interesting, and I'll kind of paraphrase through this for you. Nearly 75% of U.S. drivers said they are suffering financially due to the high cost of fuel. 75%. More than 25% said they are racking up debt or can't afford to pay a bill because of the extra money they are spending on gas. Another 44% said they have had to cut back in other areas such as clothing or eating out to offset the additional expense of gasoline. The hedge today, as prices rise, Americans turning to their credit cards. We talked about this the other day. Fact, the stimulus checks are gone. Fact, savings are being depleted. In most cases now, people have absolutely no money saved up. 50% of this country doesn't even have $1,000 saved up for an emergency. How does the average American make it at this point? They charge it. They charge it. They are now dependent on credit cards. Consumer debt rose at the fastest pace in 20 years in February. Americans now owe a total of $4.48 trillion in consumer debt. Soon, these same people are going to realize that those cars and houses that they bought with credit were completely overpriced. Credit card debt rose 20.7% in February, now sitting at $1.06 trillion. That's a lot of credit card debt. $1.06 trillion in credit card debt. We, as a nation, are in very, very big trouble. We are the biggest debtor nation on planet Earth. 70% of our GDP is based on consumption. We have been living at least the last decade on a credit card and on a fantasy. And this is all coming to an end. And this is why I make these videos, ladies and gentlemen, because I really am very, very concerned about where this is all going. I'm concerned about everybody, my neighbors, people that I don't know, people in my town, people in the state, people, my entire country. I'm very, very concerned because if this country continues to erode, it's going to affect every one of us. Each and every one of us is being affected right now. And if we keep allowing this carelessness, this recklessness of just spending money we don't have as a nation, we are all doomed. No matter how much gold or silver or food or water, we are all going to be doomed. If this nation continues to live on a credit card, spend money it doesn't have, live in excessive debt, we're all doomed. And so it is really all of our responsibility to get financially responsible. And the spending has to stop in the household. It has to stop in the government. There has got to be some kind of responsibility taking place here. And I know that we can't control everybody. We can't control the system, but we can control us. And it's imperative that we are all really being cautious of how and where we're spending money, that we have a safety net, that we have cash put away, that we have assets put away, because this thing is just beginning. What is this going to look like in July, August, September, December? What's it look like in 2023? There is no magic wand that is going to fix where we're at. We are in uncharted water. We've never been here. and there is no easy way out. The hedge today. The Fed can't fix the economy, but it can break it. And there is no doubt about it. They're going to break it, ladies and gentlemen, whether they want to or not. They are going to break it all. They're going to break the stock market. The economy is already broken, but it's going to break more. And this is why, again, it's so imperative that you take care of you, that you get your financial house in order. Me personally, I've ordered more gold from SD Bullion. I've had a couple people ask me where I'm buying my metals from. SD Bullion, I have a link down below. I don't care if you buy gold, if you buy silver. I don't care if you buy it, you don't buy it. I don't care where you buy it from. I know that people get very, very angry and upset that I recommend and refer people to SD Bullion. But that's where I've been buying for over 3 years now. And who turned me on to SD Bullion? It was literally 100 people who watched this show years ago that said I should be buying from SD Bullion. I've been happy. They've been very, very competitive with price. They get metals to me very, very quickly. I don't have one bad thing I can say. They've been nothing but a reputable, fantastic company to deal with. So SD Bullion, link down below if you need gold or silver. And again, I don't care if you buy gold or silver. It doesn't change my life in any which way. Now you can go out and buy cryptos. You can go out and buy stocks. You can rely solely on cash. You can do whatever you feel is right for you. Me, it's cash, it's gold, it's silver. I like gold the most. But to these people out there who think I'm sitting here just selling gold and silver, I've been buying gold since 2005 at $500 an ounce. Today, it's nearly $2,000. So anybody who's been buying gold over the years has not lost a cent. They've been making money. They've been preserving wealth. And that's what it's all about right now. Me, I am not taking risk. I'm preserving the wealth that I have. It's about acreage. It's about having dollars. It's about having gold. It's about having silver. And it's about, most of all, having zero debt. So again, I think it's good to get rid of debt. I think it's good to have some dollars. I think it's good to have some gold and silver. And if you can afford some acres somewhere and plant a garden and have some cattle, that's phenomenal. But we all can't do that, right? So I'm trying to get there. That's my plan. But I'm not buying anything in a bubble like the one we're sitting on right now. So as far as real estate is concerned, the sales are coming. I'm sitting back and I'm being very, very patient. And if you're doing the same thing, keep stacking cash, gold and silver, and wait for the sales because they are coming. But if you need gold or silver, check out the link down below or go to one of the 100 different precious metals dealers online. Go to your pawn shop, go to wherever you want to go to. But again, I think that we have to be well diversified here. Again, you may think that it's cryptos, it's stocks, it's bonds. Do what your heart desires. I'm not telling anybody to do anything. I'm just sharing with all of you what I'm doing. And so far, it seems to be working. And I believe that when things really accelerate and implode, you're going to be happy that you have gold, silver, cash, because you're probably going to go out and buy some acreage. You're probably going to go out and buy a house. You may go and buy some stocks when you begin to see this market really unwind and fall like a rock, and you'll be happy you have some cash for that. But anyways, I want to wrap it up here. There was an article that it was titled, "Why the Past 10 Years of American Life Have Been Uniquely Stupid." And I'm not really going to get into it, but it was on Drudge Report if you want to check it out. But I just like the title because really think about what people have done over the last 10 years, addicted to video games and baseball games and football games, and people using their homes as ATMs and this FOMO, fear of missing out. And we've had so many people pull money out of their homes to jump into the stock market, to jump into cryptos. What will happen to these people? And now that mortgage rates are going up and refis are collapsing, where's all this money going to come from to keep supporting the stock market and the crypto market? A lot of this came from FOMO, and people use their homes as ATMs pulling cash money right out of their homes so they could go buy cryptos, buy into the stock market, buy cars, buy RVs, and now, guess what? Refis are done. And now these people better hope and pray that the price of their homes don't plummet, because on top of buying into an overpriced market, they pulled more money out of their home to buy into another overpriced market of cryptos and the stock market. It's going to be a mess. It's going to be a mess. But where's all this money going to come from now to support all of this? So I'm going to wrap it up right here. I could go on and on. Very interesting day in these markets. But people are clinging onto delusional fantasies, ladies and gentlemen. Yes, delusional fantasies. And I'm aware that the market could bounce back tomorrow. I get it. There's still a lot of manipulation. The Fed is still trying to keep everything propped up while raising rates. But something's going to give here. And take today as another reminder of what is coming. More volatility, more uncertainty. And I do believe the Fed is going to raise rates in May, in June, and throughout the summer. These rates are going to have a catastrophic effect on the housing market. We're seeing the 10-year bond yield right now, 2.78. Bond market is just out of control. And this is going to affect the average American, the middle class, and the poor. And there's still people out there that believe the middle class is not being affected at all. I just, again, delusional fantasies. People are still living with delusional fantasies that the Fed is going to save them, that right now, as I look out the window, nothing's wrong. $6.49 for a gallon of gas, $5 for a loaf of bread. If you go to lunch anywhere, it's literally $20 now. And of course, the food it tastes like garbage. Portions are smaller and the service is horrible. But there are delusional people living in fantasy land that believe that everything is okay. Almost like Stockholm Syndrome, I guess. Reality is here, ladies and gentlemen. And if you have not begun preparing mentally, physically, spiritually, and financially, I pray today that you start. God bless.